Time now for Smart Charts with Abigail Doolittle, where we take a look at timely topics through the charts with the street's top technicians. Abigail, you're taking a deep dive into the S&P today.
You are right about that, Taylor. And to do that with me today is John Kolovos from Macro Risk Advisors. Great to have you here with us.
Thank you for having me.
As always, and so the big story, of course, right now, not just stocks, but bonds. But let's put them together because you have a great chart here that I love, stock-bond correlations.
Sure, absolutely. I think this chart is really, I think, speaks to how equities are going to resolve themselves to the upside. What we see here is this 26-week rolling correlation of the S&P 500 to interest rates. And you can see that currently, at least last 10 years or so, the correlation has been quite positive, where back, from the 70s up until, the late 1990s, it was negative. So as interest rates go, I believe that's how stocks should eventually resolve themselves. So if the correlation is positive, and if interest rates are at their second lowest oversold condition since 1962, there could be a potential for some sort of capitulation in the market.
Okay, so let's take a look at another chart on capitulation, a true capitulation.
Right.
Although it's sort of funny to talk about it. David Keller and I of Sierra Alpha Research, we were talking about the possibility of a capitulation bottom. Have we seen it? Which is sort of funny to do because we're so close to the top. But the selling pressure we saw in the first week of August was pretty extreme. So talk to us about, there's a lot going on here.
Absolutely, there's a lot going on. What do we see here? This is the S&P 500 on top. Right in the middle here are the percentage of stocks above their 10-day moving average, and on the bottom is the put-call ratio, right? So this is a measure of short-term trend, okay? And on the bottom is a measure of sentiment. So if put-call ratios are very high, there's a lot of fear in the marketplace, all right? So what we saw on August 15th, we actually got a capitulation signal. We got fewer than 20% of the stocks above their 10-day moving average, and we saw a big spike in the put-call ratio. And historically, when this happens, the market is higher 3 months out, 80% of the time. So it's quite a very timely indicator. However, with these capitulation signals, they tend to occur oftentimes near the starts of bear markets, and that has me a little bit worried.
That's interesting for sure, and especially taking a look at the degree of capitulation we saw last year. But to your point about a bear market, you have a chart here that's very similar to one that we've been presenting for a couple of months. So talk to our viewers about what this is and what it means.
So what we have here is what's known as a classic broadening formation, right, where you have higher highs and lower lows, right? But really what it represents is an extreme in bullishness and bearishness or sentiment. Very,
lots of uncertainty.
Lots of uncertainty.
Wild moves.
And volatility, right? But when I stare at this chart, I say to myself, well, have I seen this before? It's not terribly common, but you think back to the 1970s, we saw it then, okay? And I kind of defined the 70s in that era, and it was very volatile movement. So how this tends to play out like it did in the 70s, if this is the peak in 1974, we could very well find ourselves down and undercut the low in December, which would be a 20% peak to trough.
Yes,
move.
the chart that we've been looking at, it's looked that way too, especially if we go below this year's lows. It looks like we could see a real
I just want to add
breakdown.
one last thing on it. Trend is incredibly important here, right? So this 2731 level on the chart has to hold.
If not, it could get pretty ugly.